Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 29th magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day, had a fantastic weekend. I know I did. And let's make sure that you and I, that we do all that we can to have a magical Monday. And, of course, here at TFNN, we're going to have a magical Monday, a terrific Tuesday, a wonderful Wednesday, a gosh darn terrific Thursday, and fantastic Friday, especially if you are part of the virtual trading competition, because there's going to be winners all over the place out here. And congratulations to each of you for taking the action to go ahead and join this wonderful contest out there. It is going to be some great trading. We've got some great markets, really, in order to be able to have this trading competition. I mean, it couldn't have worked out better. We've got some nice volatility in the markets where you got markets cascading, down 150 points this day, 100 points the next day. I mean, that's really the way that you can make some trades out there. Currency pairs that are teetering in different spots. I mean, there's all kinds of places for you to be able to put on trades utilizing the Nadex platform. So remember, folks, always remember that diligence is simply the mother of good fortune. So I say be diligent and create a fortune. Now, during the next hour, I'll help you to do that by utilizing tools, extraordinary tools that really help us identify where price is headed to. That means we'll look at our lightning bolt, our A to B equals CD, because that pattern is prevalent in everything that we trade on every time frame out there. So it's a great measurement tool, a great ruler to help us understand where price is headed to, especially if used properly. We'll also look at Fibonacci retracements and expansions. The two of those combined are what make those Gartley butterfly patterns. And we look at Japanese candlesticks, because those are messages that bulls and bears leave for you and I each and every trading session. We take a look at TAS market profiles, Chapman waves. We take a look at primary trading ranges, the Rhodes momentum trading strategies. We look at everything that we can. We use the best of everything that we can in order to assist us in trading. Now, that means you might have some best of tools inside your trading bag out there, and so therefore we'd love to hear from you. Better to have 4 eyes on a chart than 2. And if you're looking at a chart, just give me a call at 877-927-6648. Internationally, 727-445-1044. Then you and I, we can go hunting for bulls and bears, because it is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow traded up 126 points. She's trading out at 16,985. S&P off 14 right now, trading at 1968. Composite down 30, trading at 4482. Russell off 8, trading at 1111. DAX down 90, FTSE off 30, Goldilocks up $4, trading at 12.19. Silver just turned slightly negative. We got platinum up $4. The King dollar off 100 ticks this morning, trading out at 85.66. You got to the upside, you've got Athlon Energy. We don't look at anything moving to the upside. We ought to do that here this morning. That's up 24%, up $11. Ambit Biosciences up 86%. That must be an IPO out here, or else they have cured some wonderful disease out here. Let me see. No, it is not a IPO. They have cured some wonderful disease. We'll take a look at that. Einstein Noah Restaurants. That is Einstein Bagels out there, BAGL. That's up 50%. Holy cow, what is behind that? And they don't even have very good bagels. But that is needless to say. What is behind this move? Let me see if I can find some kind of news out there. Oh, they're going to be acquired. There we go. So Einstein Noah Restaurant to be acquired by, let's see, who is the acquiring company out here? So their let me pull this out. First casual segment of the restaurant industry operated under the Einstein Bagel Brothers name, Noah New York Bagels and Manhattan Bagels. That's interesting. And JAB Holdings. I didn't know that all of those companies were underneath that umbrella out there. So who is buying them? Acquire Einstein. Oh, Noah Restaurant Group is acquiring them. Pursuant to its JAB's affiliate would acquire Einstein Noah. No, the group. I can't figure it out. I'll read it during the breakout here. Nonetheless, it is a buyout. So, I know that Nico probably doesn't like bagels too much, but Stevie does every now and then. And I would have to say I will pass an Einstein Bagels place if I was really in the mood out there. That doesn't mean I haven't been there, and I'm not trying to trash them. I just have to think on a level of 0 to 10, they're closer to the 4 or 5 level, nowhere near the 10 level. In any event, what else do we have moving here to the upside? You got Tibco Software, TIBX up a nice 20%, AMAG Pharmaceuticals up 17%, GoPro up 3%, DreamWorks Animation, DWA up 17%, up $3, Clovis Oncology up 3%, Diamondback Energy, FANG is the ticker symbol out there. That's up about 3%. Ambarella up 2. To the downside, Priceline lead the charge off $14 right now. Puma Biotech off 9. Tonix Pharmaceuticals off 8. Win down about $5. You've got Precision Cast Parts PCP off 361. Again, our call number 877-927-6648. Let's get things kicked off. Let's do this here. As we were going into the last segment of the show, we had a caller from Thailand who was asking about what was going on inside of the S&P 500 sectors, and we stopped off by taking a look at, where I stopped, what I was able to get through was the energy sector. So let's go back and take a look at that. Let's go see what's going on inside of the sectors out here. Give me a moment to get back here. XLE, there we go. The XLE, the energy sector. Now, the energy sector has been the weakest sector out here, and so we want to pay attention to it. Now, I've got the weekly chart on my screen here right now, and if we take a look at where price is trading to, as we speak, it's trading into the weekend at April 14th. Now, that had 63 million shares. You closed inside that last week. You closed inside it with 69 million shares. Now, it's not a swing point or anything, so we're just simply trying to gauge ourselves. The swing point inside of the energy sector takes you back to February of 2014. That's got 98 million shares there. Hey, our markets, they made a low on August the 8th, right? It's a weekly chart that we're looking at. If you come take a look at the week ended August 4th out here, that's really the swing point that it is traded below, meaning the energy sector, 65 million shares, and it was busted with 59 million shares, and then 59 million shares last week, 69. It's kind of interesting. It wasn't until last week that it actually took out that swing point from August. I haven't seen that. So now you got the energy sector maybe setting up a Tiger Gartley pattern out here. So on a weekly chart, you say, Steve-O, what would that look like? And I'd say that's an excellent question. Well, you start with the swing point high from June 23rd. You start with you then go next to that August 4th swing point low. You then take a move up, a retracement up into August 25th to mark our C point. 1 to 1.272. That looks to be the next segment as it pushes down to about 89.93 out there. Let's take a look at retracements. Let's go take a look at the Gartley now on this longer-term Gartley. And that has us coming off of the February 3rd low to the high that was put out here. So, Mike, thanks for the call, because I hadn't really taken a look at the energy sector on a weekly basis out here. And the actual Gartley buy pattern inside of the energy sector sets up right around $89.32. $89.93 happens to be your 1 to 1.272 A to B equals CD. So we'll see. We'll be watching for some kind of reversal signals on an intraday chart out there. But it's not as if the weakest sector inside the S&P has lost its marbles or has really moved lower with any kind of conviction from a volume standpoint out there. And again, just take a look at the sideways action and what it's really trading into. And we're looking at that 63 million session week from the week of April the 14th out here, the bottom of which is where we see, or the close to the bottom of which is what really creates that 0.618 Gartley buy area. So we want to keep our eyes in the energy sector. Now, if I take a look at the daily chart, daily looks a little bit different than the weekly out here. But again, it's still that's where you've got your next potential. I do say potential. Gartley pattern. If we take a look all the way over on the left-hand side, you're going to see there's your sign of strength, April 15th. And that had 22 million shares out there. And we have only seen, let's see, you really didn't see much. You had a 24 million share day on September 24th out there. I think that might have been the Fed day when, was that Fed day or was that options expiration? No, I think that was Fed day out there. in any event, you had a high volume session, and I just don't know what to make of that because we didn't see any kind of damage from a price standpoint wise. But you can easily make the case that where the XLKH is pulling back into, it's already pulled back into it. Quite frankly, the breakout area from April 15th, 22 million shares, and you pulled back into that on Friday was 11 million shares. Hey, how about that? So yeah, the energy sector, I think that could be the tip off because what Stevie is expecting here, I'm expecting a choppy market here for the next several days. Could be even the entire week out here before we then see the nice buyable bottom. One alternative I'm looking for is a nice big push lower with volume. I don't know if that's going to happen. I'd like to see that happen. I'd like to see it be a scary low. I'd like to see all the bears get on one side of the market on the and then I'd like people to ignore the fact that the Qs would be making a low with volume out there, because that's what's really needed to set the hook. Now, we had a hook that was set, at least the first hook was set a couple days ago. That was last Thursday when we saw the Qs actually push down with volume out there. And that's the signature of a bottom. That is not the signature of the, of a market that wants to continue moving lower out here. So that's the energy sector. So we want to pay attention to the energy sector as well and watch for that. Now, interestingly enough, how about this? I didn't see this. The energy sector formed a key reversal session on Friday. Yeah, that's a daily chart we're looking at. So, on that bounce that we saw on Friday, now you might be saying to yourself, Steve-O, what's a key reversal session? I'm glad that you asked me that. Here's what a key reversal session needs. Three things out there. It needs three elements. Number one, first element it's not necessarily in this order. So one element, I should say, versus first element, but one element is you see a market or you see a candle where the prior session high and low was taken out. Well, if we take a look at September 25th out here, the high was 92.21. The high on Friday, 92.37. Take a look at the low on 9.25 on Thursday, 90.76. What did we see on Friday? We saw 90.50. So we see that occurred. You have to come from an extended condition. What's an extended condition? Well, I like to take a look at a number of different tools out there to try to identify an extended condition. One of those is where you've got the price down into, or where the market is down into the 30-ish level of your 14-period relative strength indicator, RSI out there. That's one thing. Well, we had that. I like to see an A to B equals CD that has completed. Well, shoot, we completed a 1-to-1 A to B equals CD to the downside. So any move higher today, now obviously we saw a gap down this morning, hasn't taken out Friday's lows out here, but it is also another signature item of a market that wants to turn. Again, we can learn more about what's going on. From weakness, you shall receive strength inside the market, and that is what we are seeing potentially taking place and unfolding inside of the energy sector. So we want to keep a close eye on it. I did not notice the key reversal session that took place on Friday out there, so that is certainly something to pay attention to. So that was the energy sector. The XLY, I believe, is actually the fourth. The consumer discretionary is the actual fourth weighting structure inside the S&P 500. So we get back from this break. We'll go take a look at the consumer discretionary, the staples, the industrials, utilities, and the materials. We'll finish off taking a look at the S&P 500. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 96. S&P is down 8. Before we go back to the consumer discretionary sector, let's go take a look at what's going on inside the market as we speak here right now. I'm going to switch over. We're going to take a look at two different time frames, two different charts out here, and just try to get an idea of what is going on. We're going to take a look at the 120-minute chart here for the S&P futures. Now, as we take a look at it, if you're watching this on Tiger TV, you're seeing my Ninja Trader chart that I've got, this application. Of course, everything all being fed by e-Signal out here. And as we take a look at it, I'm going to put this up on the screen. Really, the patterns here that I want to focus on is as the market was moving lower, this is a 2-hour chart, so as the market was moving lower into that 10 a.m. time frame out here, it was doing it with less relative weakness, meaning it was pushing down. It didn't have the same type of strength that it did back here at the 4 p.m. time frame on September 25th as we made a lower low out there. Now, what we're seeing take place and try to unfold, this candle here, unfortunately, does not conclude until 12 noon. So we got a lot of time left in the trading session. But I want to show you what may be unfolding out here. As we speak right now at this candle at 12 noon, if you were to see a close above 1965.25, you'd have a bullish engulfing candle out there. That is a bullish reversal signal. If by 2 o'clock you see a higher move, a higher close out there, that would be confirmation of one of the nice tradable bottom patterns out here that Stevie likes to look at. What I would be really focused on, though, is this. and this is what I am focused on. That's the 1970.15 level. Of course, the S&P future can't trade in 15 cents. So 1970 and a quarter is what we're going to take a look at. You're trading 1965.50 right now as we speak. If you see it close above 1970 and a quarter, what you're looking at right here is you're looking at the two market profiles. You're looking at the resistance level. That's the red dash lines going across my screen. And you're looking at that point of control, that blue, kind of like aqua-ish looking. And you can see that the distance between the two of those is pretty narrow. That is where all the sellers are really camped out and they're hanging out. And if you can see it close above 1970.25, I'm not talking 1970.50 out there, it'll send a very important message about the market. Otherwise, expect this to be the real fight, or in between this 1967 and 1971 is what we'll call it area. But if you see it close above that, let's just call it this. If you see it close above the level, let me turn this off because that count is no longer correct out there. There we go. If you see a close above, let's call it, let's use this candle session right here because that would be correct. The September 26, 4 p.m. high of 1979 and a quarter. You'll see probably a bigger bounce in the market even tomorrow out here. But that, so far, the 120-minute time frame, you do have this price relative strength divergent pattern that's showing up. The real key, again, is going to be that 1970-71 type area, and that's what's going on the 120-minute chart out there. And again, as I say, the sellers are loaded up in that area, so that is the challenge that the bulls have as they try to clear that high hurdle out there. Let's see, I had a 300-minute chart out here inside the NASDAQ, and it looked like that. Did a disappearing act on me? Is that possible? Let me see here. No, it didn't do a disappearing act. There we go. If we take a look at this, now this is a 300-minute chart, and this doesn't end till 2 p.m. But this is in that seventh wave down, or potentially in that seventh wave down, when we saw some lows inside the NASDAQ this morning get down to 39.98 out here. And as we can see right now, it's got a nice bullish reversal signal out here, a bull sash candle. Now, this trading session at this stage, it's already above its market profile resistance. Unfortunately, though, it doesn't really complete this candle session until 2 p.m., so you got to come back at 2 p.m. and really assess what's going on here. But we do have the signs of a market, and we may have seen the lows for the day out there, and just providing some of that information to you folks, especially if you are trading in the TFNN virtual trading competition out here, for you to be paying attention to and taking a look at. Let's go back now and take a look at the sectors. Let's go try to finish that off. Let's take a look at the energy sector, the consumer discretionary sector. That's the XLY. I believe number 4 weighting inside of the S&P 500. This here is trading down below. It's traded out almost down to the 1 to 1.618 A to B equals CD. Its price projection there was 66.57. Got down to a low 66.68. That's pretty darn close to me. Let's take a look at retracements out here. By the way, the volume on its down session was 4.6 million shares on Thursday, up with about 3 million shares, 2.5 million shares on Friday. But there was 6 million shares. How about this? As we saw a move lower here on September 23rd, boy, a nice move higher with volume on September 24th out there. When we get back this time, I promise you, we're going to go look at the rest of the sectors. That's the XLY, the XL, the XLU, the XLB. This is Steve Rhodes at TFNN. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 95, S&P down 9, Composite off 12, Russell only down 4 points as we speak right now. Let's go finish off these sectors, and then we'll continue peeking around the market out here. So what do we have on the XLY out here? Bottom line is you got a Gartley buy pattern that has set up. It has not been confirmed with any kind of bullish reversal signal out here, but that is a pattern that is in place as we speak right now. It's a push down into that 66.78 level. Let's go take a look at, the XLP, Consumer Staples area. XLP is the ticker symbol. From a weighting standpoint, I think it's number 676. It is. You want to talk about some strength out here. Now, this is neither overbought or for sold, that's for sure. And if we go from the high to the low out here, we take a look at retracements, it is also strong like bull. Now, consumer staples, oftentimes an area where you see defensive plays, I would say, as this bottom forms out here in the market, to be focused on the consumer staples area as well. Now, we've got a lot of stocks that have performed well inside the consumer staples. As an idea, what is inside there, the XLP Where do I have it? The XLB, got the GE, XLI. Where is it? Right here. So you got Procter & Gamble, Coca-Cola. You got Philip. Oh, did I just got... I didn't mean to do that. Shoot, I had them in order, and now they're not out. Got Walmart, Walgreens, Philip Morris, Procter & Gamble, Pepsi, Altria, Mondelez, Coca-Cola, CBS Healthcare, and Colgate, making up the top 10, or at least it was as of about 2 weeks ago, making up the top 10 with inside of that sector. So I would go focus on those stocks. Remember, preparation, it is key. But let's go back and take a look at. The XLP has not even made the dead cat bounce. Has not even made the 0.382 retracement, which would be the 44.68 number out here. I would expect it to at least do that, but it, too, is forming a bottom. Let's go take a look at the XLI, the industrial sector out here, see what it is doing. I believe the XLI, the industrial, is also, let's go, I don't know, but there's not as strong as the XLP or the XLV out there. But let's take a look at its retracement from low to high, meaning we're going to come back to August 6th to the high that was put on out here on September the 19th. It's down. It's headed down to about 52.59. It's 0.618 retracement level. It's probably its next move out there. Moved down on Thursday with volume of 10 million shares, bounced with 5.8 million shares. So far today, about 2 million shares out here. That's the XLI. Let's take a look at the XLU, the utility sector out here. As we take a look at the utilities, they're trading out at about 41.73. Off of its low to high out here. So its low being put in on August the 6th, the high out here on September the 8th. You'll see that it's now made the 0.618 retracement. That's at 41.44. No big volume or anything. In fact, that's made a Gartley buy pattern because we can see the A to B equals CD pattern inside of this. The A point is going to be that high there on September 8th. The B point is going to be the low on the 12th. The C point is going to be up here on September 17th. It's made a 1-to-1 A to B equals CD and the 0.618 retracement level. You don't have a reversal signal, but you do have a Gartley buy pattern, 0.618 Gartley buy pattern that is in place as we speak right now. If we take a look at the last sector, the XLB, I think this has been the sector that's been one of the strongest out here. We had Mike from Taiwan calling in asking us for any sectors that were overbought or extended, and we really weren't able to find anything. But if we do take a look at this sector, you want to talk about strength out here. The XLB, right now today, it's trading below. It's never even gotten down below its daily market profile low. It's never even touched it. It's only been able to get down to its point of control level. That's the area where both buyers and sellers were most comfortable with trading. That was at the 49.91 level out here. This thing is strong like a bull. We'll take a look at maybe an equity or two that's inside here. But this has just simply done a 0.382 retracement as well at that 49.91 level. Let me switch over here. Let's take specifically a look at the XLB. Now you've got companies like Monsanto, Dow, DuPont. DuPont, I think, was DuPont really moving higher? I think that pushed the XLB up higher last week. You've got Praxair, Freeport, McMoran, PPG Industries. PPG Industries is the only one that is green right now. Let's go take a look at PPG Industries and see what it is doing out here. So PPG Industries, it's got a swing point from back on August the 1st. That had volume of 704,000 shares. It's trading inside that. It's come back there with 501, 383. Today it's done 75 million shares. So it's pulling back into a swing point with light volume. That's its swing point from August 1st out there. That's PPG. So this thing is not falling apart at all. Shows you the strength. It's made its way back to that swing point, but it's made its way back to that swing point on light volume. If it takes that out with more than 704,000 shares, then you've got a couple A to B equals CD patterns that it could form. But it just doesn't have the energy, or at least it has not shown that it has the energy as we speak right now. That was on PPG Industries. Okay, so we took care of the S&P 500 sectors. I guess we're taking a look at a couple of the stocks that are inside here. Let's go take a look at, let's see, what is off this morning? I don't have the percentage here. Let's take a look at Monsanto. Let's go take a look at MON and see what it is doing out here. Monsanto looks like it is... Well, what Monsanto has done, so it's traded down into a swing point. Let's go check out the volume here. It has not been able to bust it to the downside. That was August 1st, 4.2 million shares. Traded down there with 8.9 million shares on September 10th, but it was able to hold that low, and it formed a hammer candle. That says that the low of 111.03. So you want to talk about, are the bulls hanging out? Holy heck, they're hanging out here. And inside of Monsanto, they're hanging out at a price point of 112.13. Of course, the real number that you'd be watching is the 111.03 level, because if you break that, whether it's with volume or not, if it breaks a hammer candle, that's not a good scene. Says you'd see prices about the 104.57, but this has got some pretty nice bullish action out here. At least we know where the bulls are defending themselves inside of Monsanto. MON is the ticker symbol. Let me check out DuPont. DD is a ticker symbol. I think this was the one that took off for the moon here recently. Yeah, it did back here in the trading session of September 17th. Wide price spread at accelerated volume. 17 million shares out there. Had volume of 7 million shares out here on September 24th as well. Another nice sign of strength out here at the top. There is nothing bearish about DuPont out here. In fact, what DuPont has is a island bottom reversal signal out here. This formed a nice little island June 27th through the September 16th level. So it built a lot of time bringing in the sand, reinforcing its beaches, building a nice hotel out there, and it's taken off to the upside. About as bullish as you can get is a island bottom pattern. They don't have to form at the ultimate bottom, or the island top reversals don't have to form at the very top of it. So a lot of bullish patterns with inside of DuPont. DD is its ticker symbol as we take a look at it. Let's go take a look at some things that are actually in today's session here that are moving to the upside. We haven't done that. Let's take a look at Athlon Energy. ATHL is the ticker symbol out here. This was a bio. Maybe we did take a look at that. Ambit Bioscience. Oh, we did take a look at some of those. My apology. I did get a chance to do that. We did take a look at DreamWorks. Let me see what's going on with DreamWorks out here. DWA is the ticker symbol. So I don't see any news behind DreamWorks. So let's go see what DreamWorks is dreaming about. It's dreaming about higher price. It got some nice volume behind its move out here. It's taken out a B point this morning here with volume. The B point was September 16th, only 1.5 million shares. It's already traded 6.3 million shares today. It's got some resistance, so it's traded into an area where, folks, it's got a little bit of a supply line. Not too bad, though. That supply line only has 4.2 million shareholders versus today's 6.3 million shares. It should be able to handle that area, which is 27.13. It's those folks there needs to clear that. That's a group of people that say, hey, I just want my money back because they didn't like the ride down. They didn't like it when it gapped down on July 30th out there, got down to a price of $19.20. So as we take a look at this here, looks like we're also seeing a change in trend inside of DreamWorks. We just simply I think we are, but let's go make sure. If we just simply, I'm going to use as a trend line tool. I'll just use this high from the trading session of February 25th. Yeah, so it's broken its trend. It's done it with conviction out here. So DreamWorks looks pretty good. I would have to say the target inside DWA. Now, that is not the Dallas. Is the Dallas-Fort Worth Airport? Is that DWA? I think it is. But what's the W stand for? It's not, or is it D? No, it's DFW, Dallas-Fort Worth. What the heck am I thinking? I don't know. Maybe there's not a DWA anywhere. And anyway, well, there is. It's on my screen. That's right. So you got Dallas. You got DreamWorks Animation. So we know there's a DWA, not an air. There's probably an airport that's a DWA airport out there. In any event. It's broken its trend. Looks like 31.35 is where it probably eventually wants to trade to. That's another little bit of sign of weakness out here. A little supply line, 6.9 million shares on February 26th to the downside. Let's see. What else do we have? You got any new names that I can see out here? Nah, not a darn thing. Let's go back to the euro out here. So the euro, that is making a move. We talked about. Let me go back to the actual futures contract. I think was the futures contract? Yeah, I want to go back to the futures contract out here. Come on, go back to this page. Because we were taking a look at, it was making an A to B equals CD to the upside. And then we said the key here is I was going to go down. We were looking at a 60-minute chart. So let me get back to a 60-minute chart. We've seen it pull back here. Let's go see what we can find out inside of the euro on the 60-minute time frame. Okay, so it's pulled back to that 0.618 retracement level, like it should. That's at $1.26 out here. We'll see if this area can hold. The question is the euro beginning to see a change of a trend out here? here, whether it be short-term, whether it's just working off an overbought condition. And I'm trying to give you guys some potential clues, some potential trades for those of you that are trading in our virtual trading competition or looking for something where there could be one huge move. And I would say the currency pairs is one of those areas to focus on and pay attention to. And so we saw the A to B equals CD to the upside that had formed. Then we drew in the retracement levels. Now it's come back on the 60-minute base. I'm going to go down into a 30-minute basis out here. It's come back with a little bit too wide-ranging bar on that time frame. But let me switch over to the 30-minute and see how it's doing candle-wise out here. So it's pulling back a little bit. And the reason why we're taking a look at this here, okay, no, not too bad. If during this next 30 minutes between 10:46 and 11 a.m., we start to see this thing reject this 126 level. If it doesn't, 1.2681, its 0.786 area would be the number out here. But if we don't see that, if you do see it take out its lows or get back to the 1.267 area, then you haven't really seen a change in trend take place. So you're really trying to go down to the shorter-term time frame charts out there, because if we take a look at the daily, we'll get too consumed in the daily, and it'll be hard to see any kind of reversals out there inside of the market. So we want to pay attention, my opinion, we want to pay attention to what's going on inside of the euro, looking for the looking for a nice big trade out there, which also will impact commodities because of the weakness that it would put inside of the U.S. dollar index out here. So we'll keep an eye. I'll keep one eye on it. You keep the other eye on it. But it looks like it won't be until tomorrow that we go back and we take a look at that out here. So we're seeing a bit of a bounce off of this morning lows out here. I still expect, although I have to say we've got Stevie's charts out here. We've got the seventh wave down in the pattern inside the NASDAQ and inside the S&P. But those are on 5-hour charts. Those charts don't end until 2 p.m. out here. But we had that nice high volume move down on Thursday. That was a sign of a bottom, not the sign of necessarily a continuation. It doesn't mean that we can't see another big thump. My preference is to see another big thump. I don't know that I'm going to get my preference out here. And in fact, now that we've seen that push down, unless this seventh wave continues to move to the downside, then we could see it. But we really won't know because that's a 5-hour chart. The next candle on my system doesn't complete till 2 p.m. That means then you're going to 7 p.m. before you get any kind of confirmation of that pattern out here, because you can always move lower for the next 5 hours and just extend the move to the downside out here. So, that's why we take a look at what goes on inside some intraday charts as well. Let's take a look at some of the commodities out here. Let's go take a look at light sweet crude. Let's go see how what that is trading at. Looks like my system here is slowing up just a bit. I don't like that. But let's go take a look at light sweet crude. It's flat right now, trading out at 93.58. Light sweet crude, let's go take a look at its trend line out here. Light sweet crude is trying to change its trend and move to the upside, as are all commodities. And that's really your next biggest play out here is really the commodity sector. That's where the big money is investing in. It'll make bets out there. And the big money has taken positions. You want to talk about fortified walls out here in the market. They've taken a fortified wall that says that the U.S. dollar index is going to get crushed, just crushed out there. And that says to me, and they're also backing that up by what they're doing inside the commodities sector. I see our man Z posted some things on this morning. I haven't seen them all, but I think I saw something as he took a look at the CFTC data on natural gas, and I agree with him. That's exactly what I saw out there, as that natural gas is in the process of making a big bottom. So is gold, so is silver, so is light sweet crude. Light sweet crude, as we take a look at its trend out here, it has actually broken that trend. It did that here on Friday, as a matter of fact, and now it's trading above its market profile resistance area. That's pretty positive. That's at 93.32. A lot of time left in the trading session. We're now starting to see the commodities sector percolate. 877-927-6648. Steve Rhodes with TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Let's check in on the New York Stock Exchange out here. That's the chart that's on my screen right now. The interesting thing as we take a look at this indice, this is the indice here that, tracks the markets probably as well as anything. It's in the process right now today of potentially forming a hammer candle. It just all depends on where it closes. If it closed right here at 10,736, you'd have a hammer candle. Let me blow this up on my screen here, because I'll take us back. If we take a look at this here, this is the rising price channel. This is the house of the rising sun out here. Let me pull it back even further, time frame wise out here. You can see this nice little rising price channel that's been in place back since June of 2013. Price has now come down and it's tested that area. We had the signal for a nice bottom inside the New York Stock Exchange. That took place on Thursday. And this is where other bottoms have formed inside of the New York Stock Exchange out here. So one option was we see the market here be choppy and actually move lower with some volume. That was Stevie's first preference. It still is my preference, but I also recognize that we might not really get that, especially if the New York Stock Exchange holds up. I don't know if it's going to hold up, but I can tell you, you move down into a level of support, meaning that trend, and you do it with a bullish reversal signal, and it needs to close above this. It needs to close probably above 10,737, 736, something like that, or close up towards its the actual intra-session high as we speak right now, which is 10,742. You'd have a bullish reversal signal down there as well. So we'll see how that plays out. We got a lot of time left in the trading session. Only been trading for an hour and 25 minutes. But as your weather forecaster between 9 and 11 each day, my weather forecast is looking for a nice, big, buyable bottom. I believe that what the markets are doing here is they are in the process of forming a bottom, and of course we'll see that if in fact that comes to fruition. We'll see the price oscillators inside the New York Stock Exchange get above zero. They're a long way from doing that. We'll see the same thing in the composite. We'll see the same thing inside of the Dow, and then it'll be off to the races probably for the rest of the year, especially as we get out of this unfavorable seasonal cycle. You know what we didn't do today was take a look at any of the weekly or monthly charts for the indices out here. We'll have to do that. We'll have to do that on tomorrow. But let's take a look at the Dow. I can do it at least on the Dow. Let's go see what its monthly chart here looks like as we get ready to close out September. Okay, so we're taking a look at the Dow out here. And if you take a look at the Dow as we speak right now, you can move this down. I'm going to blow this up just a bit, move this thing down. Here's the candle that we're looking at for the month. Is there any kind of reversal signal out here? The answer is absolutely, positively not. Nada. Nowhere in sight. That is the monthly chart out here. The planet would have to fall apart tomorrow in order for that to take place out here. So no reversal sign inside the Dow. At least in the month of January, when the market moved lower, at least you got a reversal. Heck, at least you got a reversal in July. That was called a key reversal session. Of course, it got eaten up quickly during the month of August. No reversal in place here. Now, you could get a reversal. You could get a shooting star, but then what that will require is a close at about the 16,934 level tomorrow. So it's a possibility. But as we speak here right now, it is not in the cards for the Dow. And what we know about the Russell 2000, that's the beauty. It's just straight into consolidation. Death cross my cross out there. So what? What the Dow has been doing for so long, not the Dow, what the Russell 2000 has been doing for so long is it has been doing nothing more than a sideways consolidation out there, and it needs to bust out the highs or the lows in order for that to really give us its next message. But, folks, our next message is going to come from the one and only Basil Chapman. So go get your surfboards all ready. Go ahead and wax them all up. Get ready to ride the wave with Basil. I'm going to get ready to do that as well. Have a terrific Monday, a marvelous Monday, a magnificent Monday. I look forward to seeing you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.